Hi everyone, hope you're all doing well, and today I'm going to talk about a major payment IPO that is coming this week, coming up. So I'll talk about some information, where I'm at with this IPO, if I'm interested in this IPO and everything like that. But if you could, smash the like button, subscribe, and if you do want to start buying this IPO, I have left a link to a Freedom24 account. And if you sign up through there and buy the IPO through there, you will actually get the IPO at decent prices, which is probably the best thing to do, because with how much some of these IPOs have really shot up over the last few months, you know, the really hot things, just look at the Airbnb IPO, you know, if you got in at Freedom24, you'd have had a decent price. And then obviously by the time us peasants could get it on Trading 212, and it took about 2 hours for it to get placed through on the order. It was like $120 stock or whatever it was, where as the IPO price was like $68. So yeah, if you do want to get a more realistic IPO price where it's a lot more attractive, make sure you join through there. It should be the first link in the description. But we'll take a look at this new major IPO that is coming, or payment IPO that is coming on the 12th of January. So this company is called Affirm, and I really like the payment industry. Like you guys know, I'm a fan of Visa, I'm a fan of MasterCard, Square, PayPal. I've always said, you know, get a payment company in your portfolio. It's one of the key industries to have in there, because payment companies, you know, you're always going to need them. Online sales is growing more and more, card sales are growing more and more, and Affirm is one of these. You know, it's a more of an online payment company. And what these guys do is they do a buy now, pay later. So for example, let's say that I wanted to go and buy a new PC monitor screen, and the PC monitor screen was £200, £300. What I could do is I use Affirm, I pay zero interest, and I just break them payments down, say over a 3 months period, and I pay 0% interest on it. So that's basically what Affirm is. It's a buy now, pay later firm. There's a few of these coming up right now. There's not loads on the stock market, but there's a lot more private companies that are out there. So it is getting a bit more of a competitive sector. So that's just something to be careful of. But it is one of the first kind of buy now, pay later firms to come to the stock market. I think there's only one or two on here right now. So like I say, it's a hot growing sector. You've got online sales. One of the most popular things now is to buy now, pay later, pay 0% interest on them payments as well. So it is a fast growing sector that is only going to grow with online sales. And also the whole, like, I think millennials do like that kind of thing of, you know, buying now and paying later. So I think that is, it's a very popular growing industry, which I really do like. And I think like the buy now and pay later is actually the fastest growing industry of like the payment sector, funny enough. And Affirm have partners like Shopify, so that was a new partner in 2020. Another partner is Peloton, which actually makes up 30% of the revenue, which I'm not sure how I feel about that. I think like I like Peloton. I think it has a lot of growth, and you're in a company there that is obviously a fast growing company. I'm just a little bit wary that 30% of the revenue comes from that, and I think if Peloton sales do slow down when like gyms start opening, I don't know how much that could affect firms like revenue growth and stuff like that. So I think that it's a great thing that they got Peloton as a partner with such a fast growing company. I just don't know, is the slowdown when gyms open going to affect that one? So I guess that kind of makes me nervous. So yeah, I guess that's a point to make there. I'm not sure if that's a bull thing having Peloton as a partner, or a bear case for having Peloton as a partner. Also has Expedia and Walmart as partners, so they have fantastic partners. And when you think about it, because they make zero interest on these payments, what happens is firms just take like 2 to 3% of the point of sale if it goes through their platform. And that's not really bad for a lot of these guys, because let's say these guys, Expedia for example, use like Square payments, they're something like a 2.5%. So realistically, they're very competitive on the fee side of it. So it's attractive for you know, companies to actually use Affirm as a partner service, because it's pretty much the same value as what they would use anyway. So fees are all perfect from that point of view. So it has some great partners. The other key thing to say as well is that the CEO of this company is one of the ex-PayPal founders, which is Max Levechkin, and he made this company, I believe, in 2012. So it has done really well to come how far it has done in that sort of time. And just for you guys, just kind of a little off topic, I don't know if any of you guys have actually seen this, but if you actually look through like the history of the PayPal founders, and you actually look at what they've done, it's really interesting. I think they're called like the PayPal Mafia or something. And yeah, you look at all the guys that like have founded PayPal, and you look like how much success they've had. Obviously, everyone knows about Elon Musk, for example, and what he went on to do. But yeah, if you actually look at the other successful partners as well, it's really interesting how many companies like they founded. Like I think one of them's done like LinkedIn. It's really crazy that they're just really successful guys that made this company. And I think as well, the great thing about having Max Levechkin as the founder, like I know that he will be thinking like, let's not just stick to this kind of like buy now, pay later, let's expand out there. So yeah, I think they're also doing like loans, but I'm sure they'll be looking at other ways that they can make money as well. So I really do think they've got a good management team here with, obviously being very experienced with PayPal, and then obviously to have another $1 billion company in the next kind of decade is crazy. So I think like the management is very sound on this company. The growth side of it is very, very attractive. So the growth rate, Q4 was like, the growth's just been crazy, and obviously COVID has helped that situation. Q4 is 120% growth. It's predicted that Q1 is 98% growth, so it's still growing at a very huge amount. I do believe that we will see this drop more to like the 80 and 70% as the year does go on. But still, when you put that into like perspective, a payment company that's growing at them sort of rates is very, very attractive. So I do really like that point of view. Now, at the moment, the company is expected to go on the stock market at $38. That will be roughly about a 9 billion market cap. And it's looking like it's going to put in about a 700 million revenue year. I was trying to find a little bit more information about the earnings, but it seems like earnings are like really awkward. Like it's one of those where like Q2 is actually Q4 kind of situation. So it looks like to me is 700 million revenue expected for this financial year, I believe, and yeah, that a 9 billion market cap company. So when we look at that, it actually does seem pretty decent valuation, especially when you compare it to something like, I think the only other similar company that's on the stock market is Afterpay, which is like a 34 times sales, and just to put that in perspective, PayPal are at like 11, so this is going to be about a 13 if we have these financial numbers. So yeah, when you actually consider it, like it's pretty fairly valued. Like it's definitely not, you're never going to get an IPO at undervalued. Like no one's ever going to put a stock on the stock market at undervalued prices. It just doesn't make sense to do that. So you're never going to get an IPO. IPOs are always known as incredibly overpriced. So it's one of those that you've just got to be. It's probably overpriced. That's the same with IPOs, that they are overvalued. You're never going to put a stock on the stock market for undervalued prices. But yeah, I mean, when you consider it and you're like, yeah, I mean, this company is 13 price sales and PayPal's 11, and you're like, yeah, PayPal's growing at a really healthy rate. But then you put like Affirm in here, and you're like, well, this company's probably going to be doing like nearly 90, 100% revenue growth. You're like, well, that's pretty good really when you're getting the same valuation as like a PayPal, for example. And yeah, I mean, generally I expect this to be like valued more at like a 20. So yeah, it's definitely, when you look at that valuation point of view and you consider the growth, it does seem very fairly valued. You could even make a case that for a growth company, this is probably a little bit undervalued. So yeah. So overall, what are my opinions with Affirm? Well, I actually really like this. I think the two negatives I have is that Peloton makes up such a big, massive part of the revenue. That makes me a little bit nervous because I think they'll have a slowdown. And also I think as well, when you consider the industry is getting a lot more crowded, like when we talk about Square, there is a bit of competition in there, but Square far has a dominance on it. Like when you look into Affirm, like I can probably think about another 3 companies off the top of my head that are doing quite well. So yeah, that's one thing that makes me a little bit nervous is it is a very competitive market right now. So that's the only little thing that there's not much loyalty. Making sure you are the number one player, that people do put their payments through your platform. I guess that's the only little thing that does make me a little bit nervous, is that it's a very, very competitive space. It's not like these guys are the only ones in this sort of industry. The hot new kind of industry where they're the first ones to market. That's the other thing that makes me a little bit nervous. So yeah, those are the only two negatives. But nevertheless, when we put through, the industry is a fast growing industry, as well as having some really good partners. I mean, the Shopify deal should really help it as well. you look at the growth, historically the growth's been phenomenal on this company and should be phenomenal going forward. So you can't even argue about the growth side of it. And then you look at the value side of it and you're like, you know what? That's actually a pretty decent value. And then you consider in the fact of like, you look at a lot of these IPOs that happened last year. The IPOs that happened last year, they went bonkers. You know, you remember Airbnb. I mean, that was one of the more recent ones, for example. But, you know, you saw that one. I mean, the IPO price was like, I'm struggling to remember. It was something like $48 or something. Maybe even it went up to like $60. Next thing you know, that company was $140 and it just shot up. And I do think that Airbnb, I mean, going a little bit off topic, but that is now a crazy valuation for that company. But when you look at this payment company and you're looking at the growth side of it, and you look at the valuation side of it and you're like, this actually, at $38, if you can buy an IPO at $38, this company could actually, you know, on the IPO date go up quite a bit. And if you, for a growth company to be valued at this sort of rate, I mean, this company realistically could be, in my opinion, if it gets hyped up on the IPO, and the other thing I think really helps it as well is if a lot of YouTubers start talking about it. You know, I think Airbnb had that in like the last day run up. I think there was about, you know, a good chunk of the big YouTubers that started covering it, and that really helped as well. So, I mean, I think that will be another catalyst for Affirm, but when I'm looking at $38, I'm like, this could actually like pop to like $50, $60, $70 on the day of the IPO. So yeah, I mean, it's one of those where you have to be a little bit more like, it could be a little bit risky. You know, that's a bit more short term. You're not really on long term thinking way, but you're looking at it and you're like, it could do pretty well on the IPO day. Like, it is pretty decent valued. So from my point of view, I like it. I really like the company. I do think there's a lot of potential in this company, and I'll be honest, on the IPO, I'm still not fully over the line of buying it into an IPO, just because I just don't like doing it. You know, they can go anywhere. And the thing as well is, like, IPOs, they tend to have hype when they like come out, and then eventually Pinterest was very similar. Then this just slowly sell off, and then you get them on a bit of a dip. And normally that's when I like to buy them, you know, like 6 to 9 months after the IPO. You know, they have the hype, they drop back down again, but go normally below IPO price. And that's when I normally like to pick up. You have insiders that sell out as well, that were unable to sell out when they were a private company, and you see a lot of insiders selling, you know, when they do come on the IPO. And that's when I normally like to pick up. So, I mean, I'm a little bit on the fence. Like, I don't think I'll buy the IPO, just because I just generally don't like doing it. I was tempted, I'm not going to lie, because it does look really attractive. But yeah, I think it's one of those, it's definitely going on my watch list, and if it does drop, it would be one that I definitely consider buying, because I do like what's going on here. But yeah, I think it's one that I probably will watch. You never know, I might just have just change my mind on the last day and I might end up buying it. But yeah, I do really like it, but I won't be buying it right now, and it'll be a company that I do look to pick up if it dips after the IPO in 6 to 9 months time. And that's where I'm at right now. I mean, it could change because I do like it, but hey, that's where I'm at right now. I won't be buying on IPO, but it is very attractive. So I hope you enjoyed it. If you could, smash the like button. If you are new, subscribe. Remember, if you do want to buy this stock on the IPO price rather than 5 hours after trading 212 crashes, make sure you join through that link in the description for a Freedom 24 account, and you'll get one through there. And I'll see you on the next video.